Hey everyone, welcome back to FX Limit, where we break down the complex world of Forex trading into manageable strategies that you can apply to your trading routine. Today, we're diving deep into the world of fundamental analysis and how it can be the cornerstone of successful trading strategies. You've probably heard of traders who've had their big break by following economic trends or news releases, and that's exactly what fundamental analysis is all about. It's not just about the charts. It's about understanding the underlying forces that move the markets. Let's kick things off with an evergreen strategy that has stood the test of time, the interest rate approach. Savvy traders keep their eyes peeled for interest rate decisions by central banks. Why? Because higher interest rates offer higher returns on investments in that currency, making it more attractive. By anticipating interest rate hikes, you can position yourself to buy a currency before its value increases. Conversely, if a rate cut is on the horizon, you might consider selling. The trick here is to not just follow the actual rate changes, but also to read the central bank's tone and forecasts to predict future moves. Now, let's talk about the economic indicator strategy. This involves analyzing reports such as GDP, employment data, and inflation figures. For instance, if a country announces higher than expected GDP growth, it signals a strong economy, which can lead to an appreciating currency. Professional traders often have a calendar of such releases and plan their trades around them. It's not just about the numbers themselves, but also about whether the actual figures meet, exceed, or fall short of market expectations. But wait, there's more. Let's not forget the geopolitical strategy. This strategy is for those who have their finger on the pulse of global politics. Currency prices can be significantly impacted by political events such as elections, trade deals, or conflicts. For example, if a country is about to enter a trade agreement that is favorable to its economy, it might be a good idea to buy that currency before the deal is inked. This requires a bit of a gambler's nerve and a keen understanding of political landscapes, but the payoff can be substantial. Another powerful strategy is the news play. This is all about speed and efficiency. It involves trading based on news releases that can cause significant volatility in the currency markets. The key is to be quick and informed. If, say, inflation rates shoot up unexpectedly, it might be a signal to buy the currency, betting on a central bank intervention to stabilize the economy. However, this strategy requires you to be glued to the news and ready to act at a moment's notice. Lastly, let's explore the carry trade strategy, which is quite popular among long-term traders. This strategy takes advantage of the interest rate differentials between two currencies. You sell a currency with a low interest rate and use the funds to buy a currency with a higher interest rate, earning the differential. But here's where fundamental analysis kicks in. You need to be certain that the high interest rate currency won't suddenly drop due to an economic downturn or political upheaval. These strategies, while diverse, all share a common thread. They rely on an in-depth understanding of economic, political, and financial news. Successful traders don't just look at what's happening now. They predict what's going to happen next. Now, here's my golden piece of advice. Don't rely solely on fundamental analysis. The most successful traders use a combination of both fundamental and technical analysis to make well-rounded decisions. It's like having a GPS and a map. One tells you where you are, while the other guides you on where you're headed. As we wrap up today's session at FX Limit, remember that fundamental analysis can give you an edge, but it's not a crystal ball. It's about understanding the why behind the market moves and using that to make educated decisions. Thanks for tuning in. We're all about empowering you with strategies that bring clarity to the often turbulent Forex waters. Until next time, keep your analysis sharp and your trades smarter. Happy trading!